Hi, everyone. Barry McGuire here for Barry McGuire's Creative Real Estate Education Group. This is the Monday main event, and we meet up every Monday, and we talk about real estate. We talk about creative real estate, particularly. What we're looking to do is support you folks in your real estate business, and particularly your creative real estate business. So, we have experts on to talk about mortgages and tax and insurance. We have actual investors on talking about their deals. We call that the Investor Spotlight. We do focus workshops. My wife Donna and I do focus workshops where we teach creative strategies, education being the key to success. And our next one is coming up in early May 7th and 8th, I believe it is, or 8th and 9th, whatever the Saturday and the Sunday is. And we're aiming at doing a live event in Calgary at the Click Hotel, who treat us very well. So more information will be coming out on that in the near future. So what we're looking to help you do is turn your creative strategies into win-win real estate deals and help you succeed. And today we're fortunate to have with us Richard Moxley. Richard he's the credit guy. And for over 10 years, he's been teaching Canadians about credit, what it's all about, how to increase their scores. Richard has written books. He does online courses. He's a best-selling author of a book called The Credit Game, featured in the Globe and Mail, CBC Market Report, The Star, Sirius XM. And he was the Financial Literacy Leader of the Year in 2015 and 16. Richard's married. He lives in Calgary with his wife, and they have 5 children, which in itself should be tough on Richard's credit, I'm thinking. No, I'm just kidding. And without anything further, we're going to bring on Richard. And I want to hear from Richard a bit more of his background, when you finished high school and maybe you went to university. What did you do, and how did you get started in being really a credit expert? Tell us about that, Richard.
Well, I didn't raise my hand in school and say I'd like to be the credit guy. That was not the life plan. But as you know, life generally throws you for a few loops. So the biggest thing that really started it all, I was doing painting as a company, and that was the main thing. I lived in Argentina for a couple of years, and so I do speak Spanish fluently, except for anything to do with finances, because I didn't talk about finances and no such thing as mortgages down there when I was, or at least where I was. But came back, continued in the painting side of things until my brother became licensed as a mortgage broker. I thought that was kind of weird and strange. He was a postman and had retirement and everything kind of laid out, and he jumped ship just to become a mortgage broker. I thought that was kind of cool and weird all at the same, and I had no clue about any of that stuff. And so he essentially just invited me to check it out. I took the course, got licensed, and really fell into it, really enjoyed it. Not necessarily dealing with the lenders, because I'm not a big fan of this is how it is, and then kind of back crawl and look for ways to get out of it once you've already made a promise. But what I loved was working with the clients specifically. And I did some pretty high volume in kind of the year 3, 4, 5 to probably 7 years in the mortgage industry. And it was good, except for I was busy. As you know, I have a few kids, so that added to the busyness of it. And I like to say I had kind of a midlife crisis, which more kids, I think, spurs that on earlier in life. So it really came down to the fact where I was writing a book because I just didn't have time to educate all of the clients that I was meeting about credit. I wanted to help, but just didn't have time. And I really enjoyed that part of the business, but just felt like I was doing so much of the paperwork or quarterbacking that I wasn't really able to enjoy the education or the helping part. And the book, after studying hundreds of credit reports at the time, it became more of a passion. So once the book came out, people started seeing me as the credit guy and just asking me to fix errors and questions about credit. I felt that was more the passion and more the direction that I wanted to take. And that's what led me here.
That's what led. Isn't that interesting that that being a mortgage broker and having to deal with credit and having to work it into every deal, I'm sure, led you to this. As you were saying that, I was thinking to myself, I'm always, as a lawyer, as a real estate lawyer, I'm always taking specific chunks of what people need to know, and I'm writing it down and polishing it and saving it, so that when somebody needs to know about something, I can go and grab my pre-written thing that I've done, and say this is how this works. And I really, like you, I enjoy doing that. I enjoy researching it, putting it together, making sure it's written so that it's understandable, not filling it up with legalese or complicated terms. And
right.
And that is the great part of it. I get that is you can really help people if you can give them lots of information in a digestible, attainable kind of way. So that's a really interesting story to the and background to how you got to be viewed as the credit guy who can tell all of us about credit. Yeah. So I thought credit was really a simple sort of thing, and I'm guessing it's not quite as simple as I think it is. At this point, I know you've spoken to lots of groups, and why don't you just go ahead and tell us about credit in your own way, and we'll burble along until I feel the need to put up my hand and interject, and because I want to hear how it looks from your end.
On my side, once you know how what I call the credit game is played, it isn't difficult. It doesn't have to be complicated. It is pretty straightforward and direct. The biggest challenge that I find and that I really saw a need for is the fact that when there are challenges or complications, where do you go? If you call Equifax and TransUnion, anyone who's had the displeasure of waiting on hold for 45 minutes, hours, trying to get a hold of them, you're going to get a call center that their call script is essentially designed to get you off the credit report or just off the phone. Blame someone else. The information is all over the place. It's not consistent. And that's something that I think is very sad. And I understand the business aspect or wanting to keep it all mysterious, keep everyone guessing. But for something that affects the score or like the lives financially of everyone in Canada, it's something where I really feel like there's something very missing out there, and very sad, because even if you go and talk to a banker, that they're generally not qualified or understand how the report works. Some of them don't even look at credit reports. It's just kind of an approval button that comes in or declined, and it's not really them understanding it, and they're generally not sticking around too long to even get that kind of experience anyways.
Okay.
So it's
before you go on, you mentioned those names, Equifax and TransUnion.
Yes.
Why don't you tell folks who those entities are and how they fit into this conversation?
You bet. Equifax and TransUnion are the credit reporting agencies here in Canada. Anything that you hear about Experian, this is American information, which is another reason why I thought that there's a huge need when I jumped in, because Canada's awesome, but one of the downsides about being Canadian is the majority of our financial information is online, or now that's where people are jumping online to find information. And when it comes to credit, although Equifax and TransUnion are in many different countries and based out of the US, the scoring system is very different. And not necessarily even just the scoring system, but our banking system is extremely different, and how it applies and how disputes are done and just the rules around it all. And that makes it very unfortunate because Canadians will take this information that they're finding online and trying to apply it, and then getting themselves even more frustrated or into problems. So to answer your question directly, Equifax, TransUnion are the reporting agencies that all the banks and lenders should be reporting to, and they're the ones that generate the score, or you could say come up or make up the credit game.
Right. Okay. So those guys are kind of they're gathering the information, and they provide a score. So when you get a credit report, or when a lender looks to get your credit report, they get it from Equifax or TransUnion.
That's right.
Okay. Okay.
Yeah.
All right. Let you carry on now that we know who those guys are.
Yeah, you bet. So Equifax and TransUnion are there, and to your point, people look to them as kind of the creators of the score and the design, and so people trying to look at the credit or trying to understand their credit, you would assume that they would be the go-to people to ask questions or get that information. But in my experience, their information is archaic that they publish. So if you ever see a credit pie wheel with the 5 different graphs or breakdown of the 5 different things that make up your credit score, that is from the 1980s and has not been updated since then. And everybody kind of puts that out there on their website. This is how credit is. This is how your score is drawn up. But there's a lot missing, and I understand that they want to simplify it, which is a great start. But with just that information alone, I think it's very misleading and hard for consumers to really know what's going on with the information that they provide to consumers.
Okay. All right. So now, just thinking about this from the perspective of our participants here, they're all real estate investors.
Yep.
Many of them will many of them will own their own home, so they'll typically will have obtained a mortgage. Many of them are looking to buy investment properties for which they might look to get another mortgage. We hear about credit scores. We hear about credit numbers. Is there any kind of overview you can give us? Let's say I'm applying to my bank. I'm with TD Bank generally, so I go off to my TD branch, talk to a loans officer, tell him I want to buy a house. He says, "Great, you need a mortgage." Is he going to order up a credit report typically from Equifax or TransUnion on Barry McGuire? And if so, how does he do that, and what's it going to tell him?
So TD leans more towards Equifax. That's kind of their main focus. So one of the things that is very confusing for many consumers, and rent-own companies or real estate investors will come across this often when trying to help their clients or tenant buyers or whoever get more financing. The score that TD sees is not an Equifax score, which drives more questions about the score, and I'm sure we'll cover that. But each major bank has their own scoring system, and that's the one that they lean on and really trust. So if you go and apply with TD, you'll have one internal score with TD, And then if you go and apply with CIBC, who also focuses on Equifax, they will also have their own internal score. So if you bank with TD and you have an overdraft and insurance and bank accounts and you've had that history with them, then your score will be more reliable because they have a longer history of some of the things that don't show up on the credit score, or sorry, the credit report, like overdraft generally doesn't. Some banks do, but most banks don't include overdraft on the credit report. They don't have your banking history. They don't have your insurance. A lot of that information the banks do, and so they would trust their internal score more than the Equifax one.
That's interesting. Interesting. Yeah. I mean, it makes perfect sense that. Hi, Wayne.
Hey guys, how's it going?
Hey,
Good. Richard, this is Wayne Hillier. Have you met Wayne before? Have you guys met?
I think he. The name sounds familiar. I hope I don't owe you money or anything.
We'll talk off air.
I think I gotta go. Kids are calling.
Nice to meet you.
Yes.
I'm sorry I'm late, guys.
Wayne's part of our group, and he helps me with these Monday sessions. Wayne's a real estate investor. He and his wife Gabby are doing lots of things in real estate. They have a radio show every day at 6 a.m. If anybody wants to listen to Wayne and Gabby talk about real estate on Podbean.
Yeah,
nice. Podbean, yeah. So Wayne, we're just getting some thoughts from Richard on credit, and I asked him, what happens if I go to my TD bank and want to get a mortgage? So I didn't know they had an internal scoring system, but if I'm a TD customer, I can see why they'd pretty easily be able to create that and go, yeah, we know who Barry is. We've dealt with him for all these years. So would they still get an Equifax score and work it into the mix, or maybe just not even bother about that?
Yeah, it's more the information that they're concerned about or interested in, as they would be looking to see what other credit you have out there that isn't with them. That's more of a priority than the score, because they, like I said, they would trust their scoring system more than what Equifax provides. But yeah, it's really the information on all the other bank credit cards or loans and stuff with other institutions or collections or public records that they wouldn't have access to.
Okay. All right. So you haven't kind of really said, but I'm kind of getting the impression from some of your wording that credit scores can be unreliable, that TransUnion and Equifax can be difficult to deal with. I mean, does this
Sounds
mean...
like I'm bitter? Sounds like I've been dealing with them for too many years.
Well, yeah, I don't want you to be bitter, but I mean, so if a credit score and a report from TransUnion or Equifax can be very important in the credit granting process, what if those entities have incorrect information on you?
And this is my main focus, my main goal. If I could get everyone to just stop focusing on the score, then Canadians would be much better off. The score is very hard to use as a measuring stick to determine how you're doing with your credit. And that's why focusing on how the scoring system works, or more than just the scoring system, I want to drive home that with all my presentations, all my education, everything that I do, it's the score, or a high score, is not winning the credit game. What I consider really the purpose of credit, or what I call winning the credit game, is always getting approved for best rates and best terms, and never having credit hold you back. I don't care what my score is. I don't care what my client's score is at all. As long as they're getting approved for best rates and best terms, then they're playing the game properly.
So I get what you're saying. I mean, we're all going, man, I want, I mean, what's the best score you could have?
900.
900. So I want 850. And if I got 850, I'm good. But that's not right. What you're saying is you want the credit reports to be used to give the clients best rate, best terms, best rates.
Yeah, the interest rate is kind of that shiny thing that I think Equifax and TransUnion use to kind of lead people wherever they want them to go. But even if you pay for the credit report or get it for free on a third-party site, that is not the score that the bank is using. Even if you are using a mortgage broker and they are using the FICO score, the one that you're paying for or getting for free is not the FICO score. They give you a different score called the ERS 2.0 score, which very few, there's only one lender that I've heard rumors that uses it, and that was a credit union, but very few lenders even use that. The score that you see can be triple digits off what the banks and lenders are seeing. And so my real focus, and to bring it back to your original question, is what really matters is what is reporting on your credit report, and is it enough to get you approved for best rates and best terms. So your question on what happens when there's errors or issues on the credit report, that to me is the key point. And unfortunately, a lot of people are so focused on the score, they see a high score thinking that's great, but then they still get declined, or they don't know what controls that score. And so they might have a great score right now, but their score can drop 100 points in the next week by screwing it up unknowingly. And that doesn't leave the consumer in control. It leaves them as the victim, running around on the fields trying to figure it all out, but really have no clue.
All right. Yeah, I can see the problem.
Yeah.
All right. So, all right. Well, take us through then some of the things that you teach people about and explain to them about the mismatch between high scores and good results.
So the first thing is knowing that you need to look at both your Equifax and TransUnion report. Not all banks and lenders report to both Equifax and TransUnion. Major banks should, but what should happen and what does happen may not always be what is reality. And so knowing if a collection is showing up on one report, it may not show up on another. I've had a bankruptcy not show up on one and the other, accounts, whether it's a major bank or non-major bank. Some of them don't report to TransUnion, but show up with Equifax or vice versa. And so understanding what's on the credit report is really important. So going through and seeing what accounts are showing up and making sure they're correct.
So got to do both. Got to do
Yes.
both, because it's inconsistent reporting. You don't know which is which. You don't know what your bank is doing this time or last time. So you got to get both of your reports. So if a person is interested in following your coaching here, is your coaching that we should get our own credit reports and start looking at them, get both of them, TransUnion and Equifax, and start looking at them? Is that where we start?
You bet. Yeah. So look past the score and start looking at the individual accounts to see what's on them and make sure that the information you're seeing there is correct.
Okay.
So that's one of the main focuses or start pieces. A lot of people will bank with RBC, but then they'll look at Borrowell for the free credit report or get the Equifax report because that's the one they keep on hearing about. RBC only uses TransUnion. So if you're looking at Equifax, but RBC is looking at TransUnion, then you may have a great score with Equifax, but you may have a public record like a judgment or something on TransUnion that all of a sudden is the reason why you're getting declined or charged higher interest rates.
Okay. All right. So as a person who knows nothing about reports, what should I be doing about starting out doing a review of my credit? And so I want to look at my TransUnion and Equifax reports. What do I do?
So you can go to equifax.ca or transunion.ca and grab them. If you are having problems trying to figure out how to get them, there are free versions that you can get. With TransUnion, the free version doesn't include the score, but as we just learned, that's useless anyways. So you can pay for it. There's lots of different pros and cons. There's also a lot of third-party apps, or if you bank with certain banks, they will give you the credit report for free on the bank dashboard. So that's something that you can look for. If you're having problems with that or just want to find how to get the copies of the report, you can definitely email me. I have it templated, all the ways you can get it. If there's costs, that kind of stuff, I have no problem sending that to you. And if you are working with real estate tenant buyers or just trying to help your tenants get approved for a mortgage, I know a lot of landlords who are in real estate, they would love to have their tenants working towards having better credit. And that's one of the value adds that they give, or they use it in some kind of their business model. So that's something that would be good for you to have as a template to pass on to any of the people that you're working with.
All right. Well, that's very generous of you, Richard, to tell us that and to provide that. If somebody sends you an email, I'm sure Donna will pop up again Richard's contact details. So everybody who's listening, if you're having trouble figuring out where to get where or how to get your credit reports, you can email Richard and he'll give you his template, which gives you all the ways you can do that.
Yeah.
All right. Well,
So that's the first step, is getting the copies. Then when you go into the reports, unfortunately, they kind of take turns on which one is more complicated than the other. But it's one of those things where if you go for the third party apps like Credit Karma or Borrowell, they're a little easier to navigate. I wish I could say that Equifax and TransUnion provided the easiest or the best ways to go and deal with that, but the third parties, they make it much easier to read and to navigate. So that's something to keep in mind. If it's overwhelming for you, you might want to start with the third-party apps, just because they are built more for consumers to understand. They miss out, or they're not 100% all the information there, but the major stuff is definitely there.
Well, how do those third-party apps, how do they get the credit information so that they can provide it to us? Where do they get it?
They essentially pay for it to have access directly with the Equifax and TransUnion, kind of like a landlord can have access to potential renters through different apps or providers. But it's essentially when you sign up with Borrowell and TransUnion, you would sign or consent to them grabbing your information on your behalf through their portal or through Equifax and TransUnion. Okay. And then Borrowell or Credit Karma then pay Equifax TransUnion for that service.
Okay. And is the way that Borrowell or Credit Karma lay out the credit report, is it accurate enough for our purposes? Do you think is it your experience that they gather enough information to turn out a complete but more readable, more understandable report?
Yeah, unless you have just been through a bankruptcy or consumer proposal or some kind of debt program, unless you've been through something like that, the Borrowell or Credit Karma would offer everything that you would most likely need to keep on it. Of course, there in some instances it's better to get the full copy, but For the majority of people on this call, if you have decent credit already, then you're probably okay just to get the free ones. It's just those, unfortunately, they don't contain all the information needed to confirm if there's any errors after a bankruptcy or sunk in the debt program.
Cool. All right. Well, let's say we've taken the step and we've got the report and we know not very much about this, but we're determined to educate ourselves and get better at understanding credit. Once we have those reports, let's say we have one from Credit Karma, what's our next step? Obviously, we're going to read it. Is it going to be?
It's pretty straightforward. Yeah, it's pretty straightforward. The key is just to go through the personal information that's on there, make sure that it's correct. One thing that I really like about Credit Karma and Borrowell is that it's a free service, which is nice on the pocketbook. They will advertise different credit cards or products for you, but just like anything social media wise, it's and that's how they make their money, is through advertising. So they're giving you the end product for free, essentially. And you check your personal information, make sure it's correct. And then the key is to expand each account. So one thing that's they both do to help make it easier to read is they don't give you all the information at once. You kind of have to expand it as you go, so that those that just want to see the basic information can see the basic information. And then those that are looking for more detailed explanation or what's going on, then you would just have to click that button on each account to expand it, which is
so give us an example. Give us an example of an account that we might see in a Credit Karma report.
Yeah. So a credit account is a credit card
for the basic look, and then if we expand it, what would we see?
Yeah. So a credit account, whenever I talk about accounts, it's always a credit card, line of credit, loan, mortgage, or cell phone. Okay. And when I say loan, leases would fall under that category as well. So any kind of credit account, you would essentially click the little plus button or the little arrow down button, depending on which one you're looking at. Essentially, it will open up more about what the balance is, what the limit is, what the last day it was reported, the date of last activity. It will contain, can't think. That's the most important things are, is it your account, for one? When was the date of last activity? So that's what controls how active the account is. A lot of times there's errors on the credit report where you're paying it every month and you're using it every month, but it stopped reporting, or the date of last activity is wrong. So that's a common error. That should be correct, because that's what tells the scoring system if it's a current account or how important it is for the score.
Okay.
So that's
all right. And for let's talk about red flags. So we're all rookies here. We don't know anything about really credit other than sort of the vague references that we all hear. Now we've got an account. We're looking. What kind of stuff is bad news and that we better do something about?
So when you look at the personal information, you want to make sure that there's no addresses on there that you have never lived in or is not attached to you in any way. Most likely the current address isn't going to be correct. It's not really a big deal, but if it's your old address, that's fine. Where you really want to be concerned is any addresses that you've never lived in and don't recognize at all. When fraudsters try and take over your credit, they will generally change your address so that you don't get any of the notification, which allows them to play with your credit longer. So that's one of the first things that you look at.
Yeah, so that personal information, you want to make sure that all the personal information is accurate, so you know that it's you on there, and somebody hasn't hijacked your credit life.
This is actually something that I'm dealing with right now. This is actually, it's I thought this was done back in 2 years ago, but I went to go renew my mortgage, and they were asking me to verify my information because I'm like, I didn't get my renewal letter, and it's renewing tomorrow. Why didn't you guys mail me? And they checked, the address is wrong, the email was wrong, and then now I'm in the process of verifying my identity because
it can really throw you for a loop. That's for sure.
Yeah, it's a real pain in the butt.
Yeah.
All right.
Yeah. So the sooner you find out about it, the better. And to the point there, if you're just looking at the score and assume you have good credit, that still doesn't change the fact that now you're going through this headache while you're going through a renewal, which is already stressful and enough headache.
Yeah, and it's so easy to happen as you start to get more and more mortgages, and you got mortgages here, mortgages there, and all these things, and you're like, oh, this is great, I'm a real estate investor, except it's really hard to maintain and actually keep an eye on everything.
It adds to it.
Yeah.
So have you got all that straightened out, Wayne? Are you working your way through it, or is it a big, long, complicated process? How's that going to correct all this?
Thankfully, they're pretty reasonable, and I just need to go down to a CIBC branch and just hand them my ID card, and they're going to fix it all up. Nothing too crazy happened. They opened a checking account in my name. That was or a savings account. No money was added. Nothing was changed or anything. It was the one account because I cleared everything else up 2 years ago where they did this on all of them.
Yeah.
And I guess this is just one of them that they still managed to slip through. You still, even if you put fraud alerts on Equifax and TransUnion and everything, they can still manage to slip through. And so nothing crazy happened. I just need to go and verify my identity. I should have done that today, but I was too busy. Do tomorrow.
There's always tomorrow.
Yeah, exactly. It's just my credit.
Yeah.
Yeah.
Okay. Just a couple $100,000 on a mortgage.
Come on.
Yeah.
All right. So Richard Wayne's gone through this. There's incorrect information. He's working to correct the information. I'm gathering from what you've said previously that maybe it's sometimes difficult to correct stuff. You see something that's wrong. It could be wrong for a bunch of reasons. How about the corrective process other than what Wayne has said?
So don't do what Wayne does. No, it's just the problem is one, knowing what to do, because when you find that out, it's heart stopping. It's, what do you mean? I know it's me. I know what's going on. And you had some experience of going through this before, so maybe it wasn't as alarming to you. But the first time it happens, it does shake you, and the problem is where do you turn? You can go and talk to the banks, and they'll probably just tell you to go and talk to Equifax and TransUnion. And going to Equifax and TransUnion, it can be difficult sometimes to get the right answer or what's happened. So one of the key parts of any kind of fraud or dealing with disputes is, if you know what's going on with your credit reports or can see it on there, then you can see what's wrong for yourself. But the challenge is that when you don't know a lot about the credit report, then is it just your mortgage? Is it just your identity? Is it just an address? Or is there something further going on that you don't see because you just don't know how to understand the full practice of it. So that can get complicated, and that's not something that I've figured out how to educate people in a book or a pamphlet or a short video. That is very depends on the circumstance and the situation. So that's a little more.
From my experience, it was, I called the police first, and they kind of looked into it, and they're like, yeah, it's pretty basic. Nothing really bad's happened. So thank you. We'll write a report. And then you call TransUnion, you call Equifax, you let them know that something's happened. and then you call all of your individual lenders and banks and everything just to make sure that everything is correct and make sure that no accounts have been opened. I mean, as you said, it's not like they just go in and they just pull money out. They do a little bit here, a little bit there, a little bit there. Yeah. So eventually, you randomly, there might be a big refinance and they pull some equity out of your property and then they do a big one, or they just pull a little bit at a time and they're using your data. But we were able to fix it all for at least what we thought.
Yeah.
It was just 2 pieces of contact information that was that they still had. Who knows what they could potentially do with it. For last week, it was a pain in the butt because I couldn't renew my mortgage. So now I have to jump through hoops and go show my ID. But the one thing that I did notice is that I reach out. What do you do whenever something's wrong? You don't know the answer. You ask Facebook. So of course it's never a good idea. But then I get flooded with people with identity theft insurance policies and packages and stuff like that. Oh, don't worry, I'll take care of you. And then everyone's suddenly I'm a target for their next
for spam.
Exactly. So I wish I would have never done that, because for weeks I had people following up with me, trying to close me on that deal. But yeah, I mean, like you said, so long as nothing crazy's happened, it's just a matter of reporting it and then calling everybody just to make sure.
Well, what about this part? I mean, so Richard's telling us, some of the details of what can happen. Now we have Wayne saying, hey, this happened to me. So how common would it be for bad guys to have captured data and change contact information and to set this little scam in motion? I mean, has this happened to Wayne and he's the only guy in Edmonton for the past 5 years, or is it way more common than that?
It only happens in Edmonton.
Thank God for that. At least we have it isolated.
To dumb buggers who probably didn't shred their mail.
Yeah.
Probably. What do you do?
It could be, but I mean, you look at the tap it technology on credit cards, which is the biggest fraud thing helper that could possibly out there, because I could just walk around through the mall and collect everyone's credit card details. I don't even have to steal their wallet. I mean, that tap it technology, I mean, it's, the banks put it on there and I guess it's working for them. They're still making their billions, but fraud is the #1 growing crime in Canada. And I don't see anything that's going to top it, because fraud is a big money maker, and companies, I think they estimated about $3 billion, and that's just what's being reported. A lot of people don't know what's happening or don't report it because they know that it's not really gonna do anything.
So I guess what we're saying is Wayne's not the only one here, and there's lots of it going on, and so it would be wise for all of us to, as we call up our credit report, to look for those details and make sure they all are accurate. And if they're not, then we have to follow it through.
That's right.
As Wayne was doing. Yes, Wayne.
Yeah. And I apologize. I came in 10, 15 minutes late. So I have no idea what you guys talked about the first 15 minutes. But one of the questions that I had for you, and you know what, if you guys answer it, just be like, it's already been done. But I'm curious how much of a difference your credit score really does make when applying for any form of credit cards, line of credits, mortgages, like 700 to 800, 600 to 700. Like, how much of a difference are we talking?
So we kind of covered that, but you asked a good point that I think is valuable even for anyone that was listening. The point that I covered was the score that you see is really irrelevant because it's not the score that the banks use. But the other focus is that people like to focus on a high score, like you have to have an 800 in order to be good, which is hard because, like I said, the banks use a different score. You can't even see the score that FICO or what Equifax or TransUnion, their newest and most up-to-date score that banks generally use. But above and beyond that, generally it's around that 700 range. And what I talk about in my book and kind of how to explain the score in itself, it's a great first impression to the lenders. So if you were going for a job interview, and everyone's in here in real estate and they don't care about job interviews or anything like that. But if you were to go into a job interview and you had confident, you were nice looking, you're presented well, that is great. That is a great first impression and will definitely help you. But if the employer looks at your resume and there's no job history, no education that relates to the position that you're applying for, what's the chances of you getting at that job? The chances are pretty low because that confidence, that good looks, that presentation only takes you so far. So the score is really just the first threshold. And once you cross it, the score is irrelevant at that point. You're either going to get approved or you're not. Yes, you might get a better interest rate or some deals when it comes to mortgage financing, but that's still only at a 700 score. So anything above and beyond that doesn't do anything for you, except for it's great for breaking rates, competition between spouses, partners, any of that kind of stuff. Then it's great. That badge of honor that you're at an 800 is a lot of people love that kind of stuff, and my wife and I compete all the time on it. But as far as the value of it, once you cross that threshold, you're good to go.
It's hilarious because as we're talking about this, I'm like, oh, I never checked my January Credit Karma thing, and I'm like, all those mortgage applications apparently dipped me under 800 for the first time in ages. So I'm not happy about that.
Yeah.
All right. So important to get your report from Borrowell or Credit Karma, easier to read. You're looking to make sure your personal information is correct, and then you can look at each account that appears in the report. You can see the basic summary, or you can click on it to get more detail. And again, as you look at the individual items, you want to see that all of the reporting within each individual item is correct.
Yep.
Is that a summary of where we're at?
That is a summary, and definitely, you summed it up great.
Okay. All right. So back to the fixing. If it's important that it should be as we just said, and if we see errors, it sounds like if you get a free report from Credit Karma, who do you talk to? So you see an error and it's on your Credit Karma report. What do you do?
Well, if you see it on Credit Karma, that's really TransUnion. And if you see it on Borrowell, that's really Equifax. So if you're seeing on both, then you have to go to both Equifax and TransUnion. There's no sense calling Borrowell or TransUnion. They don't care. They're just trying to get the free report to you and sell you on stuff, so that they don't do anything about the fixing. But Equifax and TransUnion are legally mandated to provide ways to correct those errors. So there's really three options. You can go in and to equifax.ca, transunion.ca, and try and do it yourself. If you want, that's what I do full time, or you can have someone else correct it for you, or you can do nothing. That's really the three options that you have. If you do nothing, I mean, eventually it should come off your credit report. Just because you had bad credit 4 years ago doesn't mean that all that stuff is still on there. So there is waiting is an option. It's just a very long wait, unfortunately. And then doing it with Equifax and TransUnion, that is a process. So it does require some patience, a bit of a learning curve, but it's free and it can happen. And then, of course, if you want to pay for it, then it can happen a little faster.
Okay. Now, I'm guessing that consumers like all of us dealing directly with Equifax or TransUnion on a correction, it might not be that bad if it's a simple correction where it's an obvious error. Maybe you've got backup that you can easily provide them to show them it's an obvious error. But if things are more complicated, I'm gathering getting them to fix and change and see your way is probably more complicated as well.
Yeah, I mean, it's very similar to doing the taxes yourself. I mean, if you're an employee and you're just have your employee income and that's all you do, then doing the taxes by simply counting or whatever the software tax, I don't know, I haven't done my own this for a long time. But that there are software for that. There is the ability to fill out the forms yourself, and it might be a little complicated or a little bit of a learning process. But to your point, it is probably a lot simpler, or you pay someone, $20, $60 and do it pretty easily. But if I was going to court and it's, maybe landlord tenancy type dispute, then maybe I might be able to get through that without a lawyer. But if I'm, going through a divorce or going, hopefully my wife isn't watching this, getting any ideas. But if you're going through something litigation that's a little more complicated, then, you kind of get what you pay for. You can spend a long time learning. Yeah.
Yeah. Well, let's move along with that background. It's very interesting to me, background. Let's talk to things that people who belong to this group are experiencing and that you've mentioned. Some of them are operate rent-to-own businesses. Some of them might be looking at getting involved in an agreement for sale, which is a seller financing strategy. Well, let's go in. Let's keep it in the rent-to-own arena for the moment. So we have tenant buyers. We want them to be able to qualify for a mortgage when it's time to pay us. What coaching do you have for us on talking to our tenant buyers about improving their ability to get credit? What can we be saying to them when they just have not been very good at it, and they're going to have to be?
Yeah, it's one of those things where you want to prepare what I call a very clear and organized credit game plan on what they're doing, because maybe it's late payments, maybe it's high balances. It really depends on what's on there, but it's something that they are focused on, life and doing what they're doing. And I have found that when you give them a clear plan, it makes it a lot easier for them to follow and get to the point where they can qualify. They need to work with either a broker or really focus on getting educated to provide those plans to the tenant buyer. Otherwise, you're kind of giving someone a gun and just say, be safe. It's one of those things where it's hard when you don't know what you're doing other than you're supposed to pay your bills on time. That's unfortunately not enough to have good credit.
No. All right. So I think for most people, I think what we hear and what we coach is to say to people, listen, you've got to establish yourself with a mortgage broker that understands your rent-to-own business, understands what lenders are going to look for when they're dealing with a rent-to-own potential borrower, and a mortgage broker who will set up a plan and who will coach your tenant buyer throughout the course of the 2 or 3 or 4 year rent-to-own program in order to set them up for success and not for failure. But it sounds like we need to maybe ratchet that up a little bit. a clear credit plan. So we should be saying to our mortgage brokers, are you in a position to provide our tenant buyer with a clear written credit plan on the very specific things that they need to do to successfully qualify for a mortgage at the end of the term of the rent to own? Got to ask that question of a mortgage broker.
And it's really important. I mean, there are other services out there that talk about credit, but one of the things that I find most important is getting a mortgage broker that understands credit or will spend the time with the credit, but really understands mortgages. And that's why I like mortgage brokers. My history is mortgage financing, so I get along well with the broker industry. But what I like about them is they're not so focused on the score, or at least they shouldn't be, because they understand that you can get declined with an 800 credit score.
Right.
If you're trying to reestablish, just because you have even, let's say, a 680 credit score, which is pretty good, if you haven't reestablished your credit properly, then the banks and lenders will still say, sorry, the credit's too weak or not ready for that. Mm-hmm. And so there's very specific things in addition to the score that a mortgage broker should be educating or understanding about that. It's great that they understand how rent to owns work and get what you're trying to accomplish, and that there's a lender, that everything's set up so that the lender will be able to approve it for best rates and best terms at the end of the term. But also that key aspect is, are they telling the client exactly what they need to do? Like you said, a written plan so that you could follow up, or I don't know if the broker's going to follow up throughout the term, but if it's a clear written plan, then that's something that either you or someone in your team could follow up and make sure that everything is on the right track, so that it's a much better experience for everyone involved.
Yes, I think that each of our group members individually has to make some inquiries of their mortgage brokers. I mean, we have a couple of mortgage brokers that are on the show here on a regular basis who tell us what's going on. I mean, we think they know what they're doing. And we hear a lot about the plan. What's it going to take? And I think what I am taking away from this is that I want a clear written plan. I just don't want a plan. I want a clear written plan that's got deliverables and timelines and coaching, and is reviewable on a regular basis, so that you can contribute to your tenant buyer success. Yeah. And you got to have a mortgage broker who really gets that, who really gets it.
Yeah. And there's a lot of great brokers out there, and I think brokers as an industry as a whole, they should, but they have a lot of experience with that. So that's definitely something that you're going to want to deal. But like you said, it's good to have someone with experience for sure.
All right. And so, Richard, did I hear you also say that this is part of your business? If I call you up and say I've got a tenant buyer and he needs a credit plan and coaching, is that something that you do, and we can hire you to do that for us?
So I do the credit game plan, and I can help with that, or dispute errors and fraud off the credit reports. So that's what I do full time. Okay. I have stopped doing the follow-ups, but what I have encouraged the rent-own investors that I work with is to attend the in-depth review that I do with the client, so that they can understand. And so we go through the Equifax or the Borrowell or TransUnion, Borrowell and Credit Karma, and having the investor in there or understanding what's going on. Then once they have the written credit game plan, then they can follow up and do all of that stuff. Okay. So it's both are educated. And then if they have questions, of course, I'm there to answer any questions that they have down the road.
Okay. All right. Well, then everybody will understand that they can contact you for setting up that clear credit plan, but not the follow-up, but also helping people, with the fraud and the bad information side of things and straightening out the report. So that's part of your business. And everybody who heard that, if you need to chat with Richard, we put up his contact details. And we're at 6:00, but we have a question.
All right.
Here we go. Greg says, how can they do it though? My wife cannot be located on their systems. They can never find her or fix her information when we call, but she has no problem getting credit cards, mortgages, borrowing. But if they can't find her credit, how are they reporting her credit so she can get credit?
The fun of the credit game. So what most likely is happening is your wife has what's called a split file. And that's where there's two versions of her with Equifax or TransUnion. And when you go and try and get the credit report, they can't find it. It's not grabbing that information. But then the bank is finding some internal history, or they have a different version that they're grabbing for you. So that's something where your files need to be combined, your wife's files need to be combined, so that whenever you pull it or wherever the banks or lenders pull it, then it's corrected. So that it happens quite often, especially if you're new to Canada. So if you have any new to Canada clients, tenant buyers, whatever, it is more likely than not that they will have some kind of joint or split file, which needs to be put together.
Gotcha. Well, Richard, thank you very much. This has been illuminating in the extreme. I know a lot more now than I knew when we started out. Credit is obviously huge for all of us personally, and of course for all of us in our real estate businesses. So thank you very much for coming on. We've put your information up there.
One more question.
One more question, says my producer.
Only because it's Neil, and I think
only because it's Neil. All right.
Our junior focus team member, you mean?
All right. Do you recommend that clients open a bank account at their target bank for mortgage approval? And does the internal bank score process versus FICO score apply via the broker channel / big six banks? Someone who knows their way around the banking system asking this question.
That's Neil.
Yes. Neil. Yes, Neil.
So opening up a bank account at most people have a bank account, and otherwise you're using your mattress, I guess. But I would assume that the majority of people would have some kind of bank account. And that internal history is always going to be stronger than the FICO or the Credit Vision score with TransUnion, just because it's internal, it's theirs. And well, as long as you have a good internal relationship with the bank, if you're got overdraft fees or late payments on stuff, then of course that's not going to bode well for your relationship. But if I understand this correctly, is it better to get a mortgage with your bank? It can be. It really just depends on, well, there's a lot of different things. I always suggest talking with a broker, not just because I used to be one, but it's more because there's a lot more education and options with a broker. With a bank, it's always good to have that internal relationship with them to fall back on. You might get some exceptions done that a broker can't because you have that relationship. I'm a big fan of making sure your credit's good so that you can go wherever you want or open up more options for you. But yeah, that internal relationship can get you some exceptions.
All right.
Okay, now you can.
All right, Richard. Well, thank you very much again for coming on. Everybody's made note of your contact details. I'm glad that you're able to help with some of these areas we've talked about, because I can see having a pro do it would be way better than me doing it, even though I'm pretty familiar with lots of areas around finance and law. I still I still feel like I'd be better served if you were doing some of these things for me.
Trust me, Barry, you don't want to.
Good.
You don't want to do this.
Yeah, I'm with you. I don't want to do it. I want somebody else who knows how to do it. Thanks again, Richard. What about your book, The Credit Game? Is that we can order that up on Amazon or just?
Yeah, so it's on pretty much all the online sites. So iTunes, Spotify. It's on audio, like it's an audiobook, it's ebook,
Okay.
it's paper book. So Amazon, iTunes, Kobo, wherever. I mean, you can go to my website. If you're looking for bulk, the website is the best place to go because it's a lot cheaper. But as far as an individual copy, I think it's like $6 on iTunes or something. So if you're okay with audio, it's pretty inexpensive.
All right.
Yeah.
All right. Well, we'll sign off now. I'm sure get a lot of feedback and look forward to having you back again sometime in the future.
You bet. Thanks, Barry. Thanks, Wayne.
Thank you, Richard.
Bye, guys.
Thank you very much.